Saylor says strategy may sell Bitcoin when necessary. Michael Saylor, founder and executive chairman of Strategy, said the company never ruled out selling its Bitcoin and may do so when necessary, according to a June 12th post from crypto outlet Wu Blockchain, relaying his comments. The framing is a step back from the hold-at-all-costs identity that has defined the largest corporate Bitcoin holder for years. Strategy, formerly MicroStrategy, holds one of the largest Bitcoin positions of any public company. For most of that accumulation, Saylor's public message was consistent. The coins were not for sale, and the plan was to keep buying. Saying the firm may sell when circumstances require it is a meaningful change in tone, even if no sale has been announced. A walkback of the hold forever message. Saylor's clarification reframes years of never-sell rhetoric as something narrower than markets had assumed. His point is that selling was always an option of last resort, not a possibility he had foreclosed. That distinction matters because the entire bull case for a leveraged Bitcoin treasury rests on the belief that the holder will not be forced to liquidate at the wrong moment. A statement is not a transaction. Saylor did not say strategy is selling, plans to sell, or has a price in mind. He said the door is open if conditions demand it. For a company that raised debt and equity on the premise of permanent accumulation, simply acknowledging the exit changes how investors price the risk attached to the stock and its convertible notes. The timing lines up with solvency questions. The remark arrives shortly after JPMorgan analysts flagged that Strategy's cash reserves cover only about 6.3 months of obligations, a figure we covered when the note circulated. That report put a number on a worry that had been abstract. A Bitcoin treasury company with thin liquidity has limited room to service debt and dividends if it cannot raise fresh capital on good terms. Seen against that backdrop, Saylor's comment reads less like a casual aside and more like a response to a live question about whether Strategy could be forced to sell. By saying it may sell when necessary, he is conceding the scenario exists while trying to control the narrative around it. The company has historically preferred to issue equity or debt to fund purchases and cover costs, and selling Bitcoin would be the option it reaches for only if those markets close. The signal corporate holders send to the market strategy is the reference point for the corporate Bitcoin treasury trade. When its founder softens the never sell line, the message ripples to every company that copied the playbook, from miners to newer entrants building Bitcoin reserves. The assumption that large corporate holders are permanent price-insensitive buyers has helped support sentiment during drawdowns. Any crack in that assumption removes part of the floor. Context matters here. As of June 12, 2026, Bitcoin trades near $63,440, up about 2.5% on the day, while the Crypto Fear and Greed Index sits at 18 in extreme fear. A market already nervous about forced selling does not need much to read a founder's hedge as a warning. The price held steady through the comment, but the framing is what traders will remember. The company most associated with diamond hands has spelled out the condition under which it would let go. For Bitcoin holders, who spend rather than only stack, the takeaway is about supply psychology, not an immediate price call. If corporate treasuries shift from one-way buyers to conditional sellers, the long-running narrative that public companies are quietly removing coins from circulation gets weaker. That narrative has been one of the structural arguments for higher prices, and it depends on holders behaving exactly the way Saylor just qualified.